More stocks that we'll be highlighting. These are the stocks on the editor's radar. We're handpicking two large cap names, and let's start off then in the banking space with IndusInd Bank. Jefferies has got this stock on their radar. They maintained a buy rating, a target price at about 1550, highlighting that the CRO's resignation shouldn't warrant any price correction. Nikunj?
You know, unfortunately, with IndusInd Bank, even though they're delivering, markets are not enjoying that comfort. IndusInd Bank was trading at 4 times price to book before the LNFS crisis. Post that, they've lost their markets have lost their comfort, so to speak, because what they had shared, they've not delivered, and now it's taking their time to perhaps get that confidence back. Typically, when a risk officer of a bank, where you know that markets have been unhappy about the numbers in the past, they resign. Markets say, "Arey, kya ho raha hai? Is there something much more than that meets the eye?" And the market reaction, I think, was visible in last 1 hour of trade on Friday. I think IndusInd Bank is a cadre-based organization. We must recognize that some of the organizations like IndusInd Bank are built to last. So an individual may not be having such a large impact. It is not that, HDFC, it is not that there is a sudden exit of HDFC Bank, Aditya Puri from HDFC Bank, that it really changes the vision. Here's a routine risk officer and risk management in any bank of the quality of IndusInd Bank, which is process-based. An individual really cannot have such a large impact. So because markets don't have large kind of an comfort, it's a high beta stock, we saw this kind of an sell-off. I expect the stock to bounce back because the market reaction on Friday was overdone.
Yeah, unwarranted according to Jefferies as well. Let's move on then and discuss Cipla. It's going to be in the spotlight come May 12, especially because it will be declaring its quarterly numbers. And the street, Nikunj, seems to be penciling in that it could be a pretty strong quarter.
I think markets are underestimating the potential of Cipla's domestic business. I know it's such an expensive stock, but in a sense that the franchise what they've built and the kind of market share what they've gained and the kind of growth what we've seen in the domestic pharma business, I think is quite extraordinary. Avan, while we always think that US in pharma means US generic, we must recognize that the real bull run isn't in the Indian economy. In America, they have to cut corners to bring the cost down. So the US generic business will always be under pressure. But in India, it's very simple. We will be consuming better medicines. We would be consuming better quality healthcare. Cipla is a force to reckon with. They've got a very large portfolio both in diabetes and in the chronic care. And I think they've done a wonderful job in terms of maintaining their margins as well.
And so it's flu season is rampant.
Flu season is rampant. Their portfolio is quite decent. I mean, the company stands for a cause and for a purpose. So I would like to say that Cipla for me is more like a Rahul Dravid. It may not be very exciting if you buy the stock, but it's going to be stable.
Yeah. Okay, that's the view coming in, cricket analogy and all that. IndusInd Bank, Aisha, as well as Cipla, stocks on the editor's radar.
Oh yeah, absolutely.